Good morning. This is Chris Robinson, Robinson Ag Marketing, with today's pre-opening grain comments for Thursday, September 4th, 2025. Just FYI, I'm heading out to Des Moines today. I'll be there for 2 days, going out to do market to market. Hopefully, our paths may cross, or if you do, at least tune in for the show. Looking forward to seeing Paul Yeager out there and talking about where we are today. Overnight, a 2 cent range in corn. I'm still happy to see corn hanging in there at 418, 420. That 420 area is very big. Again, I feel like I'm beating a dead horse, but the number that really matters is that 433 uh, area. If we can go back and fill the gap from July 4th. Remember, we did that in the beans, and it was fleeting because here we are at 1025 this morning. So even if we were to go back and fill that gap in D's corner, it might be just kind of a shot in the dark. I guess that's the biggest mover overnight. Soybeans down 6 cents, trading 10.25, one as low as 10.23. If you follow my letter, we did use that last rally up to 69, excuse me, the 66 level to get caught up on sales. We've had a dollar trading range all year. We haven't had a lot to work with. Sometimes in these markets, you just take what they give you. And again, what's the driver behind the beans? China is sitting on their hands. And the interesting thing is, the funds that had flipped to long, right? So they are just like everybody else. They get short in the hole. That 80 cent rally was them. They covered about 70,000 contracts. Then they flipped and got long. So if you think you're having trouble trading these grains, those guys have, hundreds of millions of dollars in computing power behind them, and they're getting chopped up too. So I know it doesn't make it any easier to stomach when you see beans going from 1062 to 1022, but that's just the way it is. It's difficult trade, and I think the number one driver is again what's going on with China. If you look at wheat, some news overnight. Russia's crops keeps getting bigger. It seems like every time you turn around, somebody in the world saying, "Oh, we got more wheat than we thought we were going to have," and that's weighing on our prices as well. Um, you have September spot Chicago wheat now with the four handle. We traded to 495 and a quarter. You have D Sweet at 514 and three quarters. That is a new low, new contract low for D's. Remember, for a month now, we've been looking at 517 and a quarter. That's now under us. That opens the door, sadly, to going down and testing $5 beans. Flip the switch to Kansas City. It's also spot is well under $5, trading 485. December KC wheat trading $5, 505. 504 is the low last night. You got to think that they're going to take that out and try and put that headline out there. So again, if you're a producer, certainly if you've been working with me, I always tell guys when we had that rally in June to get after it. It wasn't everything we wanted, but it was probably our last chance to do some decent sales and some decent hedging. If you did nothing, you cannot worry about it now. You cannot cry over spilt milk. You can't build a time machine. You can't go back and jump in the DeLorean and hit 88 miles per hour. We just have to deal with the way things are. And how do you do that? Well, I have some strategies. If you're curious, take a look at my letter. December Minneapolis wheat also lower overnight, only a penny and a quarter, trading 571. I just lump wheat all into the same category. If wheat's going to rally, it's going to take corn, really jumping. Possibly, if corn can get going and get up to that July gap, that may give us a sympathy rally in wheat. Although that remains to be seen. Flip it over and let's look at the livestock. Well, it's going to be another day, another dollar. We have had a couple lower days. The levels to watch, we're going to see. This is Thursday. As we move into the week, we'll get some cash trade. We'll see if that can reprice the fat cattle or the feeder cattle. If you look at December feeder cattle, the number to watch. And again, if you get my letter, you'll have these levels every single day. We're starting to maybe roll over here in these. Yesterday's high, 242.80. The contract high, 243.50. Those are the two numbers I think if I'm trying to set a hedge that I'd be concerned about. If we go north of them, certainly opens up the door to possibly seeing a 250 print in these cattle. Now, are we overdue for a correction? Yeah. Can we break a whole lot and still be in a bullish move? Yeah. So if you have no hedges on, get a hedge on if you're long cattle, especially if you're long cattle in the pen. If you look at feeder cattle, I'm switching over to October. Same thing. Yesterday's high, we're looking at 367 and change, 367.15, and then the contract high 369.30. If those hold in place, and then we could definitely have even just a reasonable correction. What's a reasonable correction? Well, after the rally that we've had in the last 5 months, not to mention the last 5 years, it's kind of anybody's guess. You are starting to see some bear spreading in those markets where people are looking more towards the deferred months. So if I'm a producer and I know that I'm going to be, in the cattle business for the next year or two, boy, go take a look at um, April of 2026 feeder cattle sitting right there at 350. I mean, my goodness, if you go back even to April, we were down at 280. So, what is that $70 worth? You got to tell me. Again, one of these days we're going to have a correction and people are going to say, woulda, coulda, shoulda. Nobody sells the high. I just think that if I'm a producer, I'm trying to set hedges where I can capture a bunch of this revenue. If something changes and it goes away quickly, it's always something we don't see coming that turns us. And then moving over lastly to the lean hogs, they've been on a tremendous run. Just since July 15th, we went from 77 to 88. So even that move alone in the last 2 months has been a really good shot in the arm for producers. Same idea. There's not enough hogs out there. People think that the last pig numbers were off. There's just not enough supply out there, and the market's responding to that. Now, again, all this entire protein complex has one thing in common: the managed funds are all long. If they ever decide to hit the button and get out, it can make it, make whatever correction we have more severe. So that's about it for this morning. This is Chris Robinson, Robinson Ag Marketing. If you're looking for help, give me a call, 312-638-8868. I do not have a crystal ball. I do have 32 years of watching markets, trading markets, and for the past 15 years now, I've been working with farmers and producers. If you're looking for fresh eyes to help you with your risk management, give me a call.